Hello, hello, hello. Come on in, come on in, come on in. Come on in, come on in, come on in. I have a speaking engagement this evening, so I am going to make this short and sweet. But come on in, come on in, come on in. I want to explain self-employment tax to you sole props and LLCs out there. I want to make sure you have a clear understanding of what that is, why you have it, what it's used for, and the benefits of it, because there is actually a benefit to the self-employment tax, but then there's also the cons to those pros. So come on in, come on in, come on in. I'm going to drop the link to my Calendly so that you could book a free consultation for tax prep if you are interested. And if you are on my email list, then you would have also received an invitation to become a referral partner of ours. So take advantage of that. But there is the link to schedule your free consultation. So hello, hello, hello. I am Tracy L. Tate. I am the CEO of TLJ Professional Services, where we are about all things financial. I bring to you over 35 years experience in bookkeeping, accounting, tax preparation, as well as coaching. I have a master's in business, a master's in accounting, as well as a master's in public administration. So with that comes many, many years of experience with tax preparation and the ins and outs of tax preparation. So today, this Tax Tip Tuesday, happy Tuesday, is about the self-employment tax. So what is the self-employment tax? It's that tax that you still have to pay even if you get your tax liability to zero, okay? But so if you are an LLC or a sole proprietor, LLC, even if it's in a partnership LLC, then your profits from your business creates that self-employment tax. So if you have a loss in your business in any of those, then you will not pay self-employment tax. But here's the pros and the cons. So self-employment tax takes care of the Social Security and Medicare for you as your own business person. So when you have a business, it can be assumed, right, that this is your only source of income. And if that's the case, then you need to save for retirement, you need to save for Social Security, you need to save for disability and all of those things, okay, unemployment. And that's what that self-employment tax covers, because that is your source of income, okay? So that's the pro part of this. The con part of it is you can get your tax liability to zero and you'll still have to pay taxes, okay? Because it's after the tax liability is added to the taxes that you owe. So if you don't pay enough, then you end up owing in your tax return, okay? So just the same as like if you're an employee of a company, right? You have taxes withheld from your paycheck. As a self-employed person, so that's sole prop, LLC, or partnership that is not elected to S corp taxation, okay, the IRC code for S corp, then you are still responsible for contributing to your retirement. Okay, your old age survivor benefits is what they call them. It's about 15%. So as long as you have a profit in your business, that's what is that percentage is based on. Now let's look at that as a whole. So we're still in the pro side of self-employment tax. The more money you make as a profit, the more you pay into your Social Security. And that's more money when you actually need it, when you are on Social Security or Medicare or disability, right? Or unemployment, because all of those things are dependent on what you contributed to those what do you call them? Taxes. They are taxes. So what you contribute to those taxes. So think about it. And this is why it's a myth to pay yourself little, because what you pay yourself now or the profits you make now will spill over into what you get later. Okay. So people think, oh, I'm going to start a business to save on taxes. That's not why you're in business. You're in business to make money. Therefore, the more money you make, the more taxes you pay. Okay. Um, but in that realm of self employment tax, the continued pro side is that you will have access to Social Security, Medicare, and disability and unemployment, right? If you don't pay into those because you always have a negative or a loss in your business, then you're not contributing to those, and therefore you're not accumulating that wealth for later on. Okay. Now, the con side of it is you think you done got your tax liability to zero, and then here you come, you still have to pay these taxes. Okay. So that's a con. And that's really the only con. The fact that you still have to pay taxes. So if you owe, like you didn't have enough taken out of any wages you made or anything like that, and then you have a side business as well, then it's going to add to your tax liability. Okay. So if you didn't have enough taxes taken out, it's going to result in you owing taxes or still have to pay taxes at tax time or more taxes. Right. So the way that you plan for this is if you're working a full-time job, but then you also have the your own business, right? Whether it's sole prop, LLC. If you're S corp, you're good because you're supposed to put yourself on salary in your S corp, and then you're contributing to your Social Security and Medicare, and it's a write-off for the business, right? But you can have your W-2 income cover enough taxes to account for any wages or profits that you're going to have in your business. So to help cover the amount of your self-employment tax. So it's really knowing your numbers and being prepared. That's where the value of bookkeeping comes in, and knowing where your numbers are throughout the year, because you could pivot enough to make estimated tax payments to have more contributed through your W-2 income. Okay. You can have that go through your employer instead of paying separately in quarterly taxes or anything like that. So that's an advantage that you can have if you do still have a W-2 job. Now, if you don't, then you are responsible for and should pay quarterly taxes. Okay. Even as a sole prop, LLC, or partnership, because those are pass-through entities. They're called pass-through entities because the business itself doesn't pay taxes. The profits or loss carry forward to the shareholder. So if you're the only person that owns your business or is part of your company, then it's 100% for you. But if you have a partner, let's say it's two of you guys, if you agreed, because there is no one size fit all, it's whatever you and the other party agreed to in a contract, because it is a contract, it's a business contract, to say that you own 50, they own 50, or 60-40, or 49-51, the majority share, so that you could get other benefits. Like I've seen people do that to have husband and wives, particularly, have it where the wife will take 51% of the company or more, because they'll qualify for more things. So when you're doing like minority loans, or if you're doing woman-owned loans and stuff like that, where they're targeting a particular demographic, by you being more than a 20% owner in the company, then you could qualify for some of those benefits, some of the loans, grants, etc. Okay. So I'm saying all that to say self-employment tax is important. Okay. It's important to your survival later on. What you put in it is what you're going to get out of it later, because you never get 100% of unemployment, disability, or Social Security when you need them. It's a percentage of the income that you earned and what you contributed into your system or into your portal. They're saying Social Security won't be around. And it may not be, but guess what? Those who retire before us, we're paying into theirs. It's up to our children and our descendants to pay into ours. Okay. That's the only way Social Security is going to keep going. But self-employment taxes is extremely important to your livelihood later on in life. So that's very important to you. Now, I always recap, and I'm going to summarize the recap because I need to get ready for my next engagement. But this is Tracy L. Tate. I am the CEO of TLJ Professional Services, where we are about all things financial. Today's Tax Tip Tuesday is about self-employment tax, the pros and the cons, right? The pros is the fact that you get to control the amount that you pay, but it is something that you need to contribute to. It's going to benefit you later on in your business. Is going to benefit you later on in life when you're done in business, right? It contributes to your pool of finances when you start collecting Social Security or you go on unemployment or disability. Okay, that's where that money is pooling to. You only pay into your self-employment tax if you have a net profit, not a net loss. So if you are net lossing every year, you're not contributing to your old age survivor benefits. So when you get of older age, you won't have no benefits to collect. Okay, so think about that. That's also how you are going to pay yourself. So think about that as well. As a sole prop, as an LLC, as a partnership, you're not allowed to deduct your wages from as a business expense. All profits and or losses carry forward to you, the shareholder, okay, based on your percentage of ownership. So think about that when you're running your business and you're spending, right, the costs in your business. You want a net profit every year so you can contribute to your pool, okay? It is a pool of money for you later on. The con piece of it is simply you could get your tax liability down to zero, but because you have a profit in your business, you'll still have to pay your self-employment tax. Now, that won't be a con if you pay quarterly taxes or adjust your wages on or adjust the taxes on your wage if you still have a W-2 employee position or things like that. You can adjust your taxes so it takes care of not only the income that you're earning on that 9 to 5, but any income that you expect to make in your business. Okay. The main thing is that you want to have a profit in your business. You're in business to make money, not lose money. Right. So with money comes the responsibility of paying taxes. It's a given. Okay. But the taxes that you pay as far as self-employment tax is to benefit you later on. And it may not even be that much later if you end up getting hurt. Right. That's where disability comes in or unemployment comes in because the pandemic shut down everybody. People that were self-employed, that's how they were able to get unemployment. Because initially they were like, no. But because if that was your only stream of income, right, was self-employment, and now you can't work, they had to think about that and they had to reconsider that as, okay, but they are a business, right? They've been paying self-employment taxes, so they should be entitled to unemployment, right? But you never get 100% of those type of benefits. So you need to think about that, how much you're contributing to that and how much of it is affecting your carry forward, right, to older age. So this has been Tracy L. Tate. It has been an honor and a pleasure to bring you Tax Tip Tuesday. Join me every Tuesday for Tax Tip Tuesday. I do have a free masterclass coming up this Saturday, Road to Revenues. You should see it being advertised. You could go to my About All Things Financial page. There's a post there that you can sign up for it. It is a free masterclass. There is opportunity for you to upgrade to a VIP session where with the Q&A, and there's other opportunities to work with me personally. So I hope to see you on the masterclass on Saturday. Otherwise, I will see you next Tuesday on Tax Tip Tuesday. Please note, I have another speaking engagement next week, Tuesday. Therefore, I will not be live. I will pre-record something for Tax Tip Tuesday. Hopefully I get that done. I need to get that done and schedule it. But if I miss Tax Tip Tuesday, I will do a late Tax Tip Wednesday for Tuesday. But you guys have a blessed week and weekend. Bye.